IMA offers the Dependent Care FSA program, administered by New Synergy, to help you save on important dependent care expenses. By using pre-tax dollars while you and your spouse work, look for work, or attend school full-time. Your Dependent Care FSA can cover a wide range of needs, from preschool or before and after school programs, to elder daycare, or care for a disabled spouse or adult dependent. You choose how much to set aside for expenses during the plan year, and the program is designed to be as simple, fast, and convenient as possible. It's important to remember that the money in your FSA does not roll over from year to year, so make sure to calculate your expenses carefully when planning how much to set aside for the year. The Dependent Care FSA program works by setting aside some of your pay before taxes are deducted. The money is still yours to spend on eligible expenses, but you do not pay taxes on it. Before you enroll, you should estimate your dependent care expenses for the upcoming year, so that you can decide how much to set aside through your FSA. Your savings works by reducing the amount of your income that's subject to federal income tax, FICA tax, and state income tax. Exactly how much you save depends on how much you spend on dependent care expenses each year and your tax situation. Most people can save from $30 to $40 in taxes for every $100 set aside through their FSA. Be sure to estimate your annual dependent care expenses and make your contributions carefully. Any money left unspent in your dependent care FSA at the end of the plan year is forfeited. When trying to decide if the dependent care FSA is for you, it helps to know if the tax credit provides a greater benefit. To compare them side by side, the dependent care FSA allows for up to $5,000 in pre-tax contributions, while the IRS tax credit provides a maximum of $3,000 for one dependent or $6,000 for two or more. When calculating which option is more favorable, a general rule is that if your tax bracket is less than 15%, the tax credit will provide you the greatest benefit. This is the threshold generally regarded as the dividing point between the dependent care tax credit, best for those earning less, and the dependent care FSA, best for those earning more. Also, regardless of your income tax bracket, if you only have one child, then the $5,000 contribution limit exceeds the $3,000 tax credit, making the dependent care FSA a better benefit. You can use the dollars you have set aside in your dependent care FSA to pay for the eligible care expenses of any dependent child under the age of 13 or an adult dependent who requires day-to-day assistance and resides in your house a minimum of 8 hours per day. It is important to note that expenses cannot be paid to dependents under the age of 19 for the care of your other dependents. And in the case of divorce, IRS guidelines state that a child is a qualified dependent of the custodial parent. Only the custodial parent may participate in a dependent care FSA, and a divorced non-custodial parent cannot be reimbursed under a dependent care FSA even if the divorced parent claims the child as a tax dependent. If you currently pay to care for any dependents while you're at work, you should consider enrolling in a dependent care account. You are able to contribute up to $5,000 or $2,500 if each spouse files a separate return. When filing a claim for reimbursement from the dependent care account, it will be important to include your provider's tax ID number or Social Security number in order for the claim to be approved. As with all FSA plans, unless you experience a qualifying event, you will not be able to change your election amount once the plan year begins, and you will need to be sure to plan correctly, as any funds remaining at the end of the plan year will be forfeited. By enrolling in the Dependent Care FSA, you will be able to pay for a number of services tax-free, including most kinds of babysitting, daycare, preschool programs, and more, plus elder care services for qualifying older adults. Your Dependent Care FSA typically covers these types of expenses that allow you to work. Here are some of the most popular dependent care expenses that are typically covered by your FSA. For more information and a full list of expenses, please check out the information available at www.newsynergy.com. Accessing your Dependent Care FSA is easy, with a number of convenient options available. When you enroll, you will receive an IMA branded benefits debit card, which starting in 2016 will now be free. If you would like additional cards for dependents, you can request one by calling our customer service team. As in years past, when using the debit card, please make sure to keep copies of your receipts in the event New Synergy or the IRS request them. You will also be able to access your account by signing on to either New Synergy Mobile or the online participant portal at www.newsynergy.com. When requesting reimbursement or wanting to make a payment, you have both low-tech and high-tech options available. If paper is your preferred method, you can mail or fax your claims to New Synergy. If you prefer using your computer or mobile device, then you are able to download New Synergy Mobile or sign in to your participant portal to submit a claim. No matter who you are, whether you're just starting out or taking care of a family, there are plenty of reasons to take advantage of the benefits from enrolling in a dependent care FSA. Everyone loves the tax savings that comes with an FSA. Why not save on expenses that you pay for anyway? In between New Synergy Mobile, IMA benefits debit card, direct online payments, and rapid reimbursement, it's never been easier to save. We are excited to provide the administration for your IMA Dependent Care Flexible Spending Account benefit. If you have any questions about New Synergy or your account, please do not hesitate to email us at customerservice@newsynergy.com or call at 855-890-7239.